Everybody, it is Tuesday, the 27th of August, and the S&P 500 gave back all of the morning gains that we saw. As we stated in the midday video, the market gapped up just to where we expected it to find resistance. That is important for a couple reasons. It was the prior support in here from last week. It was the volume-weighted average price from this gap. It's the declining 5-day moving average, as well as the volume-weighted average price from the low this month. And when we go to the daily time frame, it's exactly where we see the declining 20-day moving average. That puts this market guilty till proven innocent here, and seems likely that it will continue lower here. I think if we take out this 285.5-ish level tomorrow, then we are likely to see this market begin to head back down towards the 200-day moving average and the volume-weighted average price from the December low. So keep your guard up here. The NASDAQ, similar situation, obviously, and we found the supply right where it was supposed to be found. Prior support, declining 5-day moving average, as well as the volume-weighted average price from earlier this month. We did hang on just above the volume-weighted average price from Friday, and here I sketched in I recorded the video earlier and it didn't upload properly. So here's what I'd like to see tomorrow is maybe a drop down towards Monday's lows, a rally up, and then see it decline. So don't be too anxious to short it, but here we are in a situation where the sellers are clearly in control, and the path of least resistance should lead us to the conjunction of the 200-day moving average and the volume-weighted average price from the December lows in the S&P 500 and the NASDAQ. The Russell 2000, of course, has been trapped underneath those two important levels, that is the 200-day moving average and the volume-weighted average price from the December low. And we have a pattern here that's clear, lower highs and lower lows. Looking to the 15-minute time frame, we saw this market gap up and immediately fail and made that lower low. Once again, still showing us relative weakness. I'd like to see at least a little bit of a rally before initiating a new short position, but it looks pretty ugly here. Semiconductors weren't able to make it up to that same level, which is, of course, again, the volume-weighted average price from this month and the 5-day moving average. We were looking for it to come up maybe into this area and fail. It fell short, so showing us a little bit of relative weakness. I think that tells us that look for the semiconductors to most likely break this little trend line here and the bearish flag that's been forming and continue down towards the not the year to date, but the volume weighted average price from the December low, as well as the 200-day moving average. Maybe it doesn't happen in the next day or two, but it sure seems like it is headed that direction. The biotechs gapped up and failed miserably as well. This group made a lower low, and that puts us back into watch for the 100 level. It is an ugly group and has remained bearish here with it below that declining 5-day moving average. Financials also, of course, looking weak. They came up right to the 5-day moving average, that's the orange, as well as the volume-weighted average price from the December low and the volume-weighted average price from this gap higher last week. That's where the sellers emerged, and now it's looking like this band of support in here is likely to fail in the near term, and that will put us into contention with levels perhaps down towards the March lows. So now is not a time to be looking to be a buyer.